And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, August the 16th. My name's John Hoagland. Thanks for trusting me with your time. As always, our focus is on accurate context, good risk management, and patience. Good morning, everyone. I got some opportunities, as always we do today. We do have some economic numbers to deal with this morning. First, it's National Rum Day, one of my favorite days, and National Tell a Joke Day. So somebody tell a joke. Economic numbers this morning, 7:30, the housing starts and permits came out. Now, are they good? Are they bad? There was a 9.6% drop in July in housing starts. It's about 100,000 less than they were expecting. Permits, on the other hand, down 1.3%, but there were actually more permits than they were expecting, still lower than last month. So maybe a little bit of hope in the fact that the permits didn't fall as much as they were expecting. And we at 8:15, we have industrial production today. So we've got stocks kind of sharply steady most of the evening. We get a little bit of a downtick here after the housing starts and permits numbers. We had Walmart and Home Depot earnings come out this morning, both of them better than expected. And of course, we know that all the eyes will be in the digestion of the housing starts and permits numbers today as we go through the session. Crude prices found support awaiting news as Iran apparently inches closer to the EU proposal to revive the 2015 nuclear deal. Whether that's a good deal or not is in the air, of course. VIX this morning, dead steady at 1995, almost like even more dead steady than the equities this morning. Dollar index up higher, 106.84. And the yield on the 10-year, the treasuries have had a little spike to the upside as far as their yields are concerned this morning, up at 2.83%. As always, if you like what you're seeing, hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, as well as love here on the forecast. If you like what you're seeing, let everybody know and hit the lucky like button. If there's something missing, something that you think that we can do better on the forecast, jhoagland@topstep.com. Send me your suggestions and your feedback. Of course, it's always welcome. All right. Good morning, everyone. We got Charles March first in the room, winning the prize. Dario, good morning. Rick, good morning, my brother. I love you. Dimitar, Shaw, Scott Saw, Andy Concord, chilling with Dylan, Brody, Frederico, Jeff, James, Tachyon, Randall, Chris, good morning. Three Lions, good morning. Serenity Trader, bon dia. Joe, Ron, Scarlet Arachnid, the Red Spiders here. Vince, my guy, good to see you. JST Wave DA, Bill Phillips, Terry King, Sarah Hall, good morning. Prayers and love to you as well. Tony Seidel, good to see you. JD, always good to see you. We got to see you a little bit for a few minutes yesterday. That was always nice. The Rooster, Joe, good to see you. Unicus with his quote for the day. How you do anything is how you do everything. Very interesting, interesting proverb there today, Unicus. Thank you for putting those in. I really enjoy those. I hope everybody does. Jack, good morning. Jeremy, Andrew, Anissa, Glitter Sandwich, Dan Trader, Scott Saw, saying something there. Dead Letter Opener, good morning. I'm not that bad at putting. I just can't catch a break. Well, you haven't seen me play golf. At least maybe I've got the divots getting smaller. Vlad, Dr. VJ, Stephen Hagel Matters, Jules, Jed Letter Open, a Rusty Golfer, and the Grim Reaper Trader. Today is Make Hogue Money. There is the link so you can get registered to join us in the Zoom meeting. You can watch it on YouTube. However, you will not have the opportunity to vote and to chime in on trades on YouTube. You got to come into the Zoom meeting for that. So, come on in. That's going to start right after the forecast, so we're not going to waste a lot of time today. We're going to get right into the charts here and take a look at what we're seeing. Let's take a look here into the S&Ps. Maybe we can time the crude oil for the open. Maybe not. But, okay, we are still showing our upside structure intact. Yesterday, on a push to the upside, that grind to the upside just keeps on keeping on. And we added 14,000 estimated in open interest. That's good. That's indicating that the upside auction remains relatively healthy. Volume maintained yesterday on the upside. That doesn't worry me that much. So it's all about the digestion of the housing numbers. Ever since we've been starting this rally, I'm sure a lot of folks, good morning, Mark. I'm sure a lot of folks have been wondering, when is the next shoe going to fall? What is the next bad news that's going to take us off this upside move? We don't know. It doesn't look like it's going to be the housing numbers tomorrow. We do have FOMC minutes tomorrow. We also have retail sales tomorrow, jobless claims, Philly Fed existing home sales on Thursday, and that's going to be it for the week as far as economic numbers, or at least known economic numbers that may have an effect on our equities and an effect perhaps even to the downside. But so far, what we're seeing is a healthy upside auction. That weekly kickoff high of 43.15 is certainly within reach today. Our overnight high at 4,300 and a quarter. Take a look at the 30. No real overnight inventory to deal with. We had a double distribution trend day in profiles, so the low for the session, we just closed those single TPOs from yesterday. It looks like we're going to be opening in an area that might be looking like a repair area. We've got the double distribution trend day, defined high volume nodes, and we're likely to open between them. This doesn't necessarily bode well for early trades for Make Hogue Money, but we're just going to see what we have to come up with and what we vote on this morning in Make Hogue Money. When we open between the two high volume nodes of a double distribution trend day, the market has a tendency to try and reach both high volume nodes down here at 42.69 and our point of control up here at 42.97. Pretty decent range for that today, but it means that if we open in between, there's a lot of patience that's required for the market to get to one or the other, to fade the extreme, to try and get to the other extreme of the repair area. So patience is going to be a virtue for us. We're in range, we're in value, we're opening between two high volume nodes in a double distribution trend day. That usually tells me I'm going to really try and be patient today. We'll see if we do the opening range trade. Just if it's cheap enough, we may just do it to see if we can't get on the board with a couple of little profits. But again, today, I mean, we've got the market where we want it. All the open interest is increasing. We're putting in higher ranges. Value continues to move higher. Until there's something that changes that, we're going to be, I think, looking for opportunities to buy weakness. Is it going to be the digestion of housing? I don't know. We'll be watching the open in the S&Ps and Make Hogue Money. Please join us Here's crude oil. Balance has set in as rollover nears. Rollover is probably going to be tomorrow. If not tomorrow, it's going to be on Thursday. I will be watching the volume and letting everybody know on the forecast my opinion as to when to change. Maybe tomorrow, maybe Thursday. Doesn't change the fact that we're in rollover, losing 8,000 in open interest yesterday. That is very blurry because we're spreading the volume between the front month here and several months into the future. It's very difficult to read if there's a longer time frame change in open interest. 8,000 and change in open interest could just be a function of rollover, and we know that during rollover our longer time frame traders are looking to get a cheap rollover instead of worrying about becoming directional. They will if forced, but right now it seems like they're very pleased with the way the market has been kind of in this range here for the last couple of days. Gives them the opportunity to, again, work a cheap rollover or make money on that rollover. So it looking like we're in short time frame control. Balance rules, at least for now. Our last week's low, the lower extreme of balance, last week's high, the upper extreme of the balance area. Where are we? Well, looks like we're at risk of opening with a gap. We've got overnight inventory to the long side, which is already kind of reconciling back towards settlement, back to where the market opened last night, which is really down here. So probably not going to be opening with a gap. But if we were going to be opening with a gap, it would be opening with a gap within a gap. We've got, some visible opportunities up here with the point of control from last Friday, point of control from yesterday. We've got a really high target area down here in the fact that we've got weekly kickoff low and last week's low right in the area. We did take care of this is really just a kind of a stronger weekly kickoff low here because it's come back into play. So I'm going to be thinking maybe the opening range trade for gold or for crude oil this morning, because we're kind of balancing opening, I should say, out of range or at risk of opening outside the range with a gap in a gap. Repair day today? Quite possible. This is very similar to a double distribution trend day. We've got a distribution of time and volume up here, a distribution of time and volume down here, nothing in the middle. So moving to point of control down here and point of control up here is entirely possible. Of course, we're still waiting for information about Iran. We have the API this afternoon and EIA tomorrow. Take a look at the NASI, the market that gives me heart palpitations. So still, same as the S&Ps, a little bit different. S&P's, Nasdaq, we broke out of the weekly kickoff level last week. We're already looking towards the next weekly kickoff level to the upside. The S&Ps are a little behind. Nasdaq is certainly ahead. We still have good upside structure. The auction seems healthy. We added another 3,300 in open interest yesterday. And again, on up days, on up periods, volume doesn't necessarily scare me that much as far as a failure in the auction process. We have a failure to communicate. So, as long as we keep bringing in new business to the upside, the price is likely to go to the upside. Of course, everybody is on edge now, especially coming this far, as to what is going to knock us off our little pedestal we've got our equities on. It could be anything. It could be nothing. We mentioned 4 weeks ago, 4 weeks ago that there is a paradigm shift in these equities. The buyers have come in. Whether the low is in or not, I don't know. It really depends on the future, and nobody can, of course, predict that. Predicting what the health of this auction, however, is relatively easy because we continue to see open interest piling in. We've got space above here. I mean, we could certainly, in the right situation, we could race towards weekly kickoff high here. I'm not sure we're in that right situation. Take a look at the 30-minute chart. All right, so we got to take this back here. We checked this one yesterday. We got nothing but space above. Overnight inventory a little bit to the short side now, perhaps. But again, it wasn't necessarily a true double distribution yesterday. I think maybe we left a couple of TPOs left right here. So opening between this high volume node and this high volume node could create the opportunity for repair. Why is it called repair? Well, yesterday we had a distribution of time and volume here, and we had another distribution of time and volume up here. This area here got neglected. If there's more business to do in there, price is going to have to go there, and quite often it will come back to that level to see if there's anything that was left behind as far as business to do there. You can see that the overnight has checked back in and through this low volume node from yesterday. Again, if we open in this area from point of control lower, that kind of puts the idea in my head to stay patient, look for opportunities at the high volume nodes from yesterday as repair is possible. Orion in the middle of the chart. This is volume profile, so I can show you briefly here how to put it on. Okay, this is the drawing tools volume profile. I'm going to start this profile at the open from yesterday at 8:30, and then I'm going to end it at 3 o'clock so that I get all of the volume from the regular trading hours into the profile. Lots to learn about that, Orion. If you haven't been to group coaching, I definitely suggest coming and asking questions about it. You can also get information on the market profile and volume profile in the Top Step Foundations, which is a series of classes on our YouTube channel. If you go to playlists, you'll see them there. Okay, all right, so let's move along here to look at gold. Long liquidation yesterday after breaking out and attempting to continue the move higher. We lost about 3,400 in open interest in gold yesterday on higher volume. Looks like we're overlapping. Well, we're kind of inside extended trading hours today. Perhaps looking like we're going to be at least overlapping to lower in range. We're in kind of a sticky price range here. We got a couple of overlapping 3-day areas of balance. One here, and we're in the middle of it. This is going to be tough. I said yesterday I might be thinking about taking gold off the back burner for something I will be looking for opportunities in. That may have to hold for a little while. We're in short time frame control. Upside structure broken. Thinking about starting to sell strength. And where do we see strength? Now, we opened with a gap. We have now just closed the gap. So looking at this as got a gap here. We've got overnight inventory to the short side. That overnight inventory seeming to be the impetus for this move back towards opportunity to sell strength. Got lower highs. We got lower lows. The gap close could be an interesting opportunity. Anything that limits risk is a pretty decent opportunity. We also have the VWAP, which has been holding as resistance since 2 o'clock this morning, the London session opening, which could also give us a decent opportunity. We just closed the gap. That gap close can either be acceptance of range from yesterday, or it can reject at the gap close and then continue the move to the downside. If we do end up back in value from yesterday, the value area special situation play is certainly something we could look at because it still holds downside structure even if we do get the value high from yesterday. Oh, these markets. So challenging. Here's the euro. You get the dollar kind of creeping upside today. We got a full rotation from high to low between weekly kickoff high and low. Friday, Monday, Tuesday, 3 days it took to do that. We added 5,000 in open interest on this push to the downside on okay volume. It looks to me like we got some new short sellers, some new short bets in this market as the dollar continues to creep higher. This weekly kickoff low is going to be pivotal for us today in the day time frame. Here's the 30-minute chart. Okay, overnight inventory to the short side against an inflection level, an important inflection level like weekly kickoff high. We saw this in another market yesterday in the opposite direction. We had overnight inventory too short. The sellers did not come in. Our regular trading hour session is basically bringing price back to the opening from overnight. We did not attract other longer time frame business down here just yet. Okay, this is another opportunity for us to take a look at the gap close as a potential for resistance. We've got settlement right there. Just above that, we've got last week's low already showing resistance in the overnight session. So there may be some fish on this gap close. And the 10-year rates creeping higher, broken upside structure, now in balance, short time frame control. We added 20,000 in open interest yesterday, which isn't a big number for the 10-year. And look at the volume just falling as we stay in this area of balance. When this area of balance is exhausted, it's likely to provide a decent opportunity in either direction, whichever side the breakout comes from. Take a look at the 30. Oops. We opened our regular trading hours in an area of possible, you heard it, repair. We opened in the gap that was created from Friday to Monday. Opening in that gap puts us at potential repair. We're gonna finish closing this gap. We're gonna trade down to this naked point of control and up to yesterday's point of control, or up to yesterday's point of control and then a return back down to recheck Friday's naked point of control. We mentioned yesterday where we opened, we were going to probably be looking at some sort of repair from Thursday's profile. We did a lot of that yesterday. We just a very small range, just kind of repairing this area here. Now we've got our own repair situation going on between those points of control from Friday and yesterday. Be patient in this. Better trade locations are likely to come as the day goes on. I know you guys hear me say that a lot. So here's our cup and handle now starting to provide possibly some good upside opportunity. Yesterday was an idling day. We had an additional 200 in open interest added yesterday. Not too much to do. New business is needed for continuation, and we may be seeing that now. We've taken out weekly kickoff high. This is a previous weekly kickoff high that may provide some opportunity for resistance. But if we're going to really follow suit in this cup and handle, we may have a lot more upside to go here technically. Here's the 30-minute chart. We've opened with a gap. No attempt to go and close the gap. It's going to be a hard buy up here. It's got me thinking, okay, if I'm going to try and buy it here, I want to buy a pullback. But is that pullback going to be putting in the high? One thing I don't want to do is fight this. If this thing starts to continue to move to the upside and I'm not in it, I get very tempted to try and pick the top. Well, I can't buy it, so I may as well sell it. Well, I'll sell it here and I'll get stopped out, and sell it here and get stopped out, and sell it here and get stopped out, and sell it here and get stopped out. Don't fight a one-time framing market, which this currently is in the day time frame. Higher lows, higher highs, higher lows, higher highs. Don't fight it. I know it stinks to miss the move, but I miss a lot of moves, to be honest with you. I'm the champ at missing moves. But I don't want to fight it. Don't want to fight it. So our repair zone's also called holes in the chart. Well, you could call them that, sure. Sure. They're low volume nodes, or what we would call those holes. Okay? All right. So hopefully that's some decent context for us for the day today. The fish seem a little bit hard to find today, but they're out there. Just make sure, if you're going to risk the worm, only lose the worm. Don't lose the whole rod and reel. There'll be some good opportunities for us today. Just try and stay patient. Just try and stay patient. And Ron, so this was kind of a hole, right? Low volume, high volume node, high volume node. This would be kind of an area what I would call repair. We didn't open in it yesterday and on Friday, but we did open in that area of repair yesterday, which had not been revisited. So this kind of puts the onus on this week to kind of repair this area. Now we've got our own repair because we've opened between the ranges from Friday and Monday. And now we've got those points of control as high volume nodes to look for repair of the hole that we left on Friday to Monday. Okay? All right. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Please join me for Make Hogue Money. I'm going to get that set up and have the room open at 8:20. We'll vote if we're going to take that opening range trade, but we've already seen we're in a kind of opening in an area of potential repair, which may, as much as hard as as tough as I say it, as much as I don't want to say it, might be a boring one if we have to be patient and wait for better trade locations as the day goes on. We'll figure that out then. I'll see you for Make Hogue Money in just a couple of minutes. If I don't see you, trade well today. Get out there, profit. We'll be in the proverbial trading pit with you very shortly, and I look forward to seeing you in Make Hogue Money. And again, for the recap today, and as always, the forecast tomorrow. Get out there and profit today. Have a great day.